Hello, and welcome back to Explain the Charts. Today, May 25th, 2025, we're taking a look at USDCAD, combining the latest news and technical chart analysis to navigate potential trading opportunities. Recent news indicates a bearish sentiment towards the USD, particularly following a rejection at the 1.4000 level, so let's see how that translates to the charts. We'll be analyzing trends, reversals, support, and resistance to identify key price levels to watch across multiple time frames. Looking at the one-day chart, we can see a general downtrend forming over the past few months. There was a significant drop at the end of October 2024 and another one in late December 2024, which drastically changed its price from 1.44 to 1.09 before recovering. There were also big drops in March and September 2024, and especially one in July 2024. Most recently, we see USDCAD struggling to find support, hovering around the 1.37 level. Zooming in on the more recent data, from the beginning of 2025 until now, we can see the struggle to stay above 1.37 has been there for a while. However, we must still pay attention to these prices, since the bearish sentiment surrounding the USD may strengthen the trend, potentially leading to further declines. We see the price bouncing near this 1.37 level after a failed attempt at the 1.40 range. Now, let's switch to the 1-hour chart for a closer look at recent price action. We can observe more granular movements and potential short-term trading opportunities here. Focusing on the last few days of data in the 1-hour chart, we can see some choppy price action, indicating indecision in the market. The price seems to be consolidating around the 1.38 level, and there's been fairly volatile price action. For a more detailed view, let's switch to the 15-minute chart. This time frame provides the most granular data, allowing us to identify potential entry and exit points for short-term trades. If it breaks past 1.37, look to short the USDCAD with targets around 1.365 and further down to 1.36 with less likelihood. Long-term bearish sentiment would have to exist, and the 1-hour and daily chart would have to show strong continuation downwards, otherwise these prices are less likely to occur. Key price levels to watch include the immediate support around 1.37, as a breach could trigger further selling pressure. On the upside, resistance around 1.385 to 1.39, if broken, could signal a potential reversal of the current downtrend. Based on the news and chart patterns, the most likely scenario is continued bearish pressure in the short term, with the potential for pullbacks towards resistance levels. Remember to keep an eye on any upcoming economic news releases or policy statements that could impact the USD or CD. Pay close attention to trade war developments as well, since the news articles suggest they will cause movement. That's all for today's analysis on Explain the Charts. Be sure to subscribe and hit the notification bell for more insightful market updates. Happy trading!